Nippon India Nifty 500 Equal Weight Index Fund. Will investing in this NFO help add good value to your investment portfolio, or will it help in your wealth creation journey? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this NFO is suitable for investing or not, let us first understand a few basic details about this fund. So as an NFO, it opens on 21st August 2024 and closes on 4th September 2024. And some of its key features are: it is an open-ended fund type which has Nifty 500 equal weight TRI as its benchmark index, and it belongs to the category of equity flexi cap. And the fund manager for this NFO is Mr. Himanshu Manch, and the minimum application amount you need to start investing in this fund is just 1000 rupees. And according to Riskometer, the risk involved in this fund is very high. And the investment objective of this fund is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, subject to tracking error, as this is an index passive investment. So this is the primary investment objective of this fund. Now, as we have understood a few basic details about this NFO, now let's understand something about the index it's representing, which is the Nifty 500 Equal Weight Index. So Nifty 500 Equal Weight Index represents an alternative weighting strategy to its market capitalization based parent index, which is the Nifty 500 index. So this index includes the same companies as its parent index, however weighted equally. Also, this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now let's take a look at the sectors represented under this index. So the sectors represented are financial services, capital goods, healthcare, chemicals, automobile and auto components, FMCG, information technology, consumer durables, consumer services, oil, gas and consumable fuels, services, metals and mining, construction materials, power, telecommunication, realty, textiles, media, entertainment and publication, diversified and forest materials. The highest weightage represented is given to the sector represented in this index is financial services by a weightage of 18.13%, and the lowest weightage is given to the forest material sector by a weightage of 0.37%. Now let's take a look at the top 10 holdings under this index. So the top 10 holdings are India Cements Limited, Rail Vikas Nigam Limited, Suven Pharmaceuticals Limited, Deepak Fertilizers and Petrochemicals Corp Limited, 361 WAM Limited, MMTC Limited, Kalyan Jewellers India Limited, Mazagon Dock Shipbuilders Limited, Alembic Pharmaceuticals Limited, Suzlon Energy Limited. So the highest weightage is given to the India Cements by a weightage of 0.30%. So this is the top first company. The top 10th company position is given to the Suzlon Energy Limited by a weightage of 0.24%. Now if you look at the index returns as on July 31st, 2024, according to the reports and the graphs, you can see in 1 year it has given a return of 56.80%. In 5 years it has given a return of 30.64%, and since inception it has given a return of 16.54%. So in the long run it has been able to manage to give potentially better returns with minimal volatility. So you can see it can be suitable for a long-term investment. Now, as we have understood how this NFO works and what are its basic features, now let's move on to analyzing whether this will be a good fit for our investment portfolio or not. How are we going to do that? By analyzing the pros and cons of investing in a NFO like this. So first we will look at the pros of investing in the Nippon India Nifty 500 Equal Weight Index Fund. So first of all, you can invest in a diversified portfolio which is likely to deliver you with long-term growth with minimal volatility, as we have seen the index growth and graph. So as a flexi-cap fund, it also invests across various sectors and capitalizations. So if you compare it with an actively managed fund, the returns from this fund are relatively stable with less volatility. So it might be suitable for an ultra conservative investor who's looking to add passive investments to their core equity portfolio. So also as a passive managed fund, this fund is free from fund manager bias. Because it is managed passively, it is expected to have lower expense ratio than compared to an actively managed mutual fund scheme. These are the advantages present in the NFO. Now let's move on to understanding the disadvantages of investing in this fund. Now let's take a look at the cons of investing. So first of all, as this fund predominantly invests in equities, it might not be suitable for a short-term investor, because in short-term period the market is highly unpredictable and you do not know when it will perform high or when it will perform low, when it will go through a period of negative return, low return, or even through a period of no returns. So as you do not know and you do not know how to predict it, and there is no stability in that, there is a lot of risk involved. So if you're a short-term investor who's looking to add investments to your portfolio to achieve your short-term financial goals, this might not be suitable for you as it turns out to be very risky. So do invest in it for a long term rather than short term. Also, as an index fund, it is not a guarantee it will perform just like how the index is performing. It can even underperform the index due to certain factors. And also as an index fund, the best it can do is try to replicate what the index is performing and how the index is performing. It will not be able to deliver you by beating the index itself. You can't expect market beating returns from this passively managed fund like this. Also, as I have already said, it will only perform how the index is performing. So you cannot change the fund allocation of this index fund dynamically. So just because the market is performing high or low and you want to play to the market's advantage or disadvantage, you cannot change the fund allocation, because as it is only trying to replicate the index, it will only try to replicate the index. You cannot change the fund allocation dynamically just based on the market outlook. An actively managed fund can do that, but an index fund like that will not able to do that. So also as an index fund, it will only try to see how the index is performing overall in sense, but it will not try to do individual analysis on the stocks and companies represented under the index. So there is no individual analysis done, only overall analysis of the how the index is performing. But if you compare it with an active fund, they take calculated risk by analyzing all stocks and choosing only the best. So they are able to do individual analysis, which is missing in an index fund like this. Also, one of the major drawback of an index fund investment is tracking error, because the main objective is for the index fund is to track the index perfectly, but because of tracking error, that might also not be possible. So it can also be a major drawback. Also, as an index fund, just how you cannot change the fund allocation of this fund dynamically when the market is performing high or when you want to play to the market's advantage, just like that you cannot change the fund allocation dynamically to take any course corrective measures as well during a market crash. So however the market is performing, it will only try to replicate the index, which can be a major inconvenience and one of the drawbacks of investment in an index fund like this. So what is the final takeaway from our analysis? Is it worth investing in the Nippon India Nifty 500 equal weight index fund? As you can see, this might be suitable for an ultra conservative investor who's not willing to invest in an actively managed fund. But even then, our personal opinion is there are similar index funds like this that has a lower expense ratio and a lower tracking error compared to this NFO. And also, if you're an aggressive investor and you're willing to take a little bit of risk, then you can definitely invest in an actively managed fund, because an actively managed fund has better potential to deliver you with higher returns than an index fund like this. Also, if you're an investor who's expecting dynamic fund management and investments that can beat the market, then you should definitely avoid investing in this fund. As you can see, it completely boils down to what kind of investor you are and what is your risk tolerance and what is the time horizon you have for your investment goals. So it completely boils down to that. So investing in this or not completely depends on what kind of investor you are. But even then, if you're struggling to make a decision and you need professional guidance, then you can definitely consult with a professional like a certified financial planner who will be able to guide you professionally and make your entire investment journey process hassle-free and smooth by suggesting you and recommending and personalizing your investment strategies, investment options for your more better financial future. So you can definitely consult with a professional also and invest with a professional guidance as well. You can definitely do that also. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.